So I'm 45. This is from Matthew. I'm 45. I have been managing my own finances and 401k allocations. I know the market has been up the last 10 years, so nothing has really done bad. As I get older and with talk in the media about a potential recession, I am more concerned about picking good investments. Any advice? Yeah, we do have some advice for that.
Yeah, the key thing the keywords I see in here: talk in the media, potential recession.
Yeah, I mean that we get this question probably more, or it's got to be one of our top 3 questions, right?
Yes, and what do successful investors do?
Well, they don't try to time the market, because timing the market is something successful investors don't even try to do. So they stick to a good financial plan and they keep buying good investments if they're accumulating, or if they're taking money out, they stick to a plan that, they decided is going to help them distribute this money over the long term.
Yeah. So here's another thing I think about is that Matt said he's 45. And I don't know whether this is media driven or it's just the human emotion or psychological nature of this, but he's looking at retirement as the end game. Right?
Yeah. And a lot of people do.
Right. So he's looking at his time horizon, like 15 years if he's going to retire at 60. Well, arguably his time horizon is more likely 40 years. If he lives to be average life expectancy around 85, he's got 40 years left. He has a 40-year time horizon. The thought to start thinking about becoming more conservative, it's probably not the right time at 45 years old. And maybe this is driven by the target date phenomenon that's become in 401k plans. It's become the default option, this idea that the older we get, the more we have to ratchet down the risk in the portfolio. In theory, that may make sense, but in reality, that may or may not be what you need to do. It's kind of like the 60-40 portfolio that we talked about on the last show. Well, yeah, that might work. But is it the optimal asset allocation for you? And there's really only one way to determine what Matt should be thinking about. And that's by executing a well-written financial plan and getting to the point where he can create his own independent, rate of return goal, for lack of better terms. How much do I need to earn to be successful? How much risk do I need to take to be successful through retirement? And that can be run using Monte Carlo analysis in most financial planning software that's out there.
Yeah, that's a good point. The other thing I'd like to point out is, this specific person, 45 years old, you're still in the accumulation phase, or most people at 45 are. So the other thing, the financial plan sometimes we have people that they've done such a good job saving, and if Matt has, the plan might suggest that you have a variety of ways that you could invest, whether it's the most aggressive, or at 45, you probably can't be as conservative as possible. But then that can kind of give you some confidence as to, okay, if I'm let's say today I'm in a 100% stock portfolio, and my plan says I have the same probability of success in a 100% stock portfolio, and even like you could ratchet down to an 80% stock portfolio. Well, now you have some choices where you can kind of ask yourself and start to define your risk tolerance, I guess is what I'm getting at. But you can just quantify those decisions and then make a decision that you're very confident with.
Yeah. Here's the other thing I take away from the question. He says potential recession. We'll take potential out of there. There is going to be a recession again, probably multiple, before he retires. That does not mean that the stock market goes down 50%. People have this recency bias of the Great Recession. Mm-hmm. Well, the last time that happened was the Great Depression. That type of a market correction, top to bottom of 60-ish%, somewhere in that range. So we have the recency bias. When we hear the word recession, we think that the stock market's going to crash. It may go down. It does not mean it's going to crash. So there's going to be multiple recessions, Matt, before you get to the point where you're going to retire. So we should take that off the table, because that's really a market timing. And the other thing, he said, I'm more concerned about picking good investments. Well, that's subjective, but I'd ask Matt, why are you picking investments? Do you have the time, the desire, knowledge to go pick investments? Maybe a lot of the questions Matt's asking are things that could be answered by working with a financial advisor, whether it's us or somebody else. We can help do all these things for people. Otherwise, Matt's going to have to start investing a lot of time into this to find good investments, build his own financial plan to get really good answers.
So maybe the simplest answer is for Matt, it might be time to hire a professional to help you out.
Yeah, I think so. The other thing about good investments, it doesn't always mean they're best for you. Right?
Well, that's true.
Tax brackets matter, how much you make, what you expect to do in retirement. There's a lot of business owners that are going to work through retirement. And I look at myself. Yeah, I might slow down, but I don't know if I'll ever retire. I really like what I do. So why would I retire? So my strategy could be different than somebody else, right? Because if I start pouring money into a traditional 401k that I get tax deferred growth on today, I may actually be paying higher tax bracket in retirement. So all those things need to be factored into what Matt's really concerned about. But I think the idea that getting older when you're 45 shouldn't really make a difference to your asset allocation. What should drive that's the financial plan, right? And if he's not going to do one, today's current environment with where bond yields are and prices, there's not a whole lot of upside in bonds where we're at today, because bonds do two things: either provide safety or income, and they're not providing much income today. And if interest rates go up, the safety portion of that could be limited as well. So it may be best for Matt to go ask someone for some help, ask them have them answer these questions for them with some level of confidence.
Yeah.